All right. Well, welcome everybody to Market Structure Edge, our weekly demo. My name is Henry Howard. I'm on client services, and you'll see a desk note from me every Wednesday. I want to welcome you all our new IBKR users. We have a full house today. And so welcome. If you have questions, feel free to type them into the chat. If you don't mind, if you can keep yourself muted. And there will be a recording of this demo made available tomorrow in the desk note. It's also on our YouTube page and on marketstructureedge.com. So with that, I will pass it over to Tim Quast. He has been helping us all make money the last week. I hope so. And I'll pass it to you, Tim.
Well, we hope so. Yeah. I'm Tim Quast. I founded Market Structure Edge, and Henry Howard, as he said, is our head of client services, and Brian Wilson is here today as well, our market strategist. I'm in the middle of a big project, so I had to ask Henry and Brian to cover this. But I'm just going to be here briefly. I want to give you a couple of observations, and I will hand it off to Henry and Brian. We tag team this all the time. This is what we like to do. If you haven't attended one of these before, we have a great group of veterans who are generally here, and they're expert users of our platform. We all use it. Brian and I have worked in our other business, Modern IR, which provides quantitative analytics to big public companies like Ford. Just marquee names. We have done this a very long time. We have all been immersed in what we call market structure, the mechanics and rules of the marketplace. We don't look at the technicals and the fundamentals per se. It's not that we're unaware of them, but whatever the motivation is behind money in the market, it all has to pass through the mechanics, the machinery, and the regulations of the market. And so by watching those things, we can see how all behaviors affect prices, and we manifest it through demand and supply. Mm-hmm. So my only quick observations were, repetition is a form of emphasis, is to say that we told you to expect these things in the market, not because we're geniuses, but because they're apparent in the data. We look at broad sentiment. What is the money from BlackRock, Vanguard, State Street, et cetera, doing? And how does the demand and supply change? Because that will affect the whole market. Number two, we talk about the context. What is occurring in the calendar of the market? Options, expirations, each month and month end are very important because the market is tremendously dependent on derivatives. There isn't enough liquidity for all of the money that wants exposure to the equity market, so it uses substitutes, and those get changed every month. And so we could see coming into this particular period that we might have trouble. That began last Tuesday night, Wednesday were VIX expirations. Then AM dated index options expirations a week ago from today, last Thursday. Friday were the whole boat of monthly July expiration dated derivatives. And then Monday, new derivatives traded. Then we call the Tuesday following that Counterparty Tuesday because the banks true up their books. They sell and buy and sell derivatives. And so we said, well, looking at the data, we could tell somebody lost money. And so that could manifest maybe on Wednesday or Thursday, and sure enough, it did. Right, so we're able to do those things, tell you the when, why, and what, because we're looking at the mechanics. And I would note that we said very risky time. If anything, you would be short the Nasdaq, and can you find that unmuted mic? Yeah, thank you. And so that's why. And we will help you understand how to use that to best effect. That you have to think about entries and exits, and those depend on volatility. Yesterday, the Nasdaq was down 3.6%. So I mean, it's more than all of its momentum volatility, which will be 3% or more. And so one could look at that and say, well, there's a very high probability I could make money long for a period today. Overall, the conditions in the market reflect downside risk. We are topped and supply is rising. There is a probability of additional pressure. I don't know how long it lasts. We'll just have to watch the data and see how it goes. But that was a very good trade. Brian and I both used that trade. We hedged ourselves modestly short. And I made money on that trade, and I think you did too, Brian. So we watch those things, and I'm going to go look too before the market closes to see where the volatility in the market is, because it's possible I might short it again. I don't know. I'm not telling you that's what you should do, but the reason that we do these things is because we understand the context and the balance of supply and demand and volatility. How much will things move that are priced by machines before they change direction? Well, that is something that can be known. We measure that. So with that, I'm going to return to my project. So it's got to be done today. And I will leave you in the very capable hands of Henry and Brian. So thank you for being here. We appreciate that.
Great. Thanks, Tim. We appreciate you being here. Have a great day.
See you later, Tim.
All right. Well, that was great. I was really interested to hear Tim's thoughts, and he even gave us a little hint at what the market, I think we're all looking at where the volatility is, and we're going to look a little closer at the data. So Brian, I'm going to jump in right now to my daily process, unless you want to kick us off. So I'm going to go ahead. So I've been using Market Structure Edge for about 3 years, and really it really gives me sort of a behind the scenes look. I'm not just looking at price. I'm looking at sort of all of it as a whole, and price can be very, very deceptive. And so I'm always measuring the movement in stocks against what Market Structure Edge says. So I'm going to give you a walkthrough of sort of the 4 things I look at on a daily basis, how I start my day, cup of coffee, and then I'm going to pass it back over to Brian, and we're going to check out a couple examples. So this is the full product of Market Structure Edge. Some of you, I think, are only getting the daily trading ideas. So daily trading ideas are my last step after I've sort of taken a top-down approach to the market. So the first thing that we're going to look at, and I mentioned in our Wednesday desk note, is broad market sentiment. So this is the State Street S&P 500 ETF. This is sort of our central component of what we're looking at in Edge. We have obviously the green is demand. We have down here supply. And what we're always looking for is a divergence of supply and demand. And what I mentioned on the Wednesday desk is red is sell, green is buy. And so those of you who have been around Market Structure Edge, when this line here that I'm tracing crosses below this green line, it is statistic. It's an extremely high probability trade that the market's going to go long. So even after here, we're sideways. Look at what a great time it is that this goes up and we stay, sort of flat, short volume. We have, even though it's flat demand, it's still over 5. Our sort of, our balance beam is at 5. And then look at here, we're over the red marker. Right here, we cross over the red marker. And even though broad market sentiment is still going up, we knew at expirations that this risk existed. So that's the first thing. Every day I'm checking, where did this demand move from yesterday and where did this supply move? If yesterday what we saw was this short volume drop big time, well, then I would know that people are starting to look long in the market. And after I look at that broad market, I'm going to go to a second component that I look at. And that's the number of components in my momentum portfolio and the number of components in our low volatility portfolio. Look at the companies in low volatility or in momentum. There's only 6 companies. Well, 2 days ago, that was 34 companies. Yesterday, it was 13 companies. When we see those momentum names shrinking quickly, it means, get out of the way or get short. Same with low volatility. Our algorithm is created in a way that these portfolios populate when there's good low volatility names and there's good momentum names. And by the way, I'm going to teach you how in a moment to build some of these portfolios. So number 1 is broad market sentiment. Number 2 is the number of components in these momentum and low volatility names. Number 3, we've mentioned it quite a bit, is I'm looking at the preponderance of big names and what they're doing. They move, the more that they move in tandem, the more we can expect moves like this. So look, if you were just following the drop in short tech on the 16th, you'd be in pretty good shape here. So We talk about divergence. This is just a visual cue. We see big tech declining demand, rising short volume. So what I like to do is I jump into big tech. This is sort of my third element, and then I get to the names. I look here, I say, how's this moving? How is it relative to SPY? Obviously, this demand is just like that is a quick fall off. That's falling off a cliff. And then I look at each of the names. Now, I always say, well, what's supply relative? What's demand relative? When we're in a bull market, all of these names tend to be around like they're sort of gyrating between 5 and 10, and they're trading places, and that money is all moving in tech, and they have supply nearly maybe 35 to 45% is a healthy range for the market. But when we see the supply moving up, and again the demand is sort of like cratering, I go, we better get out of the way. So those are the three components. I'll go over them one last time. Broad market sentiment, I look at. I say, what's that doing? I say, how many names are in momentum and low volatility? And then I go to big tech. It's not until I've done all that to get an idea of where the money's, like which direction are we moving? It's only after those three things that I go into our daily trading ideas. And I check our daily trading ideas. Obviously, at this moment in time, none of these, I say at this moment in time, and I go, actually, some of these names, I didn't trade a bounce today. I was expecting the sort of bounce we had, but I wasn't in on any of these names. But if you said, you know what, this is pretty oversold according to our volatility girders, I'm going to look at these three names. I don't know what any three of them have done yet today. But I'll stop there today. Obviously, you can look at the low volatility. I trade that less, but it's a lower, it's measured by volatility, so it's a lower risk trade. But again, we have all of these are historic probabilities. When I see names that are, at 87, 84, it means that stuff is not populating. That's not where the money's flowing. And so I'm not going to move there with my money either. So that's sort of my basic proposition. I have a handful of other things, but before I keep jabbering on, feel free to drop some questions in the chat, and I'll hand it back to Brian Wilson. Oh, Brian, you're muted, but.
Thank you, Henry. I appreciate that. It helps if I unmute myself. As Henry mentioned, if you do have questions, feel free to lob them in the chat line. Would love to hear any of the questions that you might have. We probably have more material than we'll have time for today, and that's a good problem to have. So let me go ahead, and I had a thought that was triggered by something that Henry was mentioning, and go ahead and go back to Market Structure Edge. And what I wanted to show you, I'll go to the big tech portfolio here for a second. Just a thought about, short volumes. So this is what Henry pulled up earlier. And as you click through here, you'll see supply is at different levels for these stocks. Now, this is a big change for big tech relative to the broad market. Each stock will generally have its own, let's call it short volume range, where it tends to go over time. Now, some of those stocks, like most of the big tech names, they're often very tightly grouped between about 30 to, let's call it 45%, somewhere in there. Some of the names are a little higher. Tesla is always just a little bit higher. And there's different companies that, similar to Tesla, well, let's look at Tesla as an example. If you look at Tesla and its norms, its short volumes just tend to be higher over time. If you get short covering for Tesla, it might mean that your short volumes are moving from 60%, down to 53, and that might be a pretty good short covering event for them. That's probably not the case for many other securities. So I just wanted to make that general observation that short volumes will differ for each company, and it's hard to make just a blanket statement that if you see short volume at XYZ percent, 40%, well, that has to be a long. Well, go check out the trends for that particular company, before you make that assumption. Short volume across the S&P 500, and I'll show you a report here. This is a report that we use for our other company. But what I wanted to share with you is two things here. One, look at short volumes across the S&P 500. It's very common for companies to have short volumes around 49 to 50%. That's the market average over the last 200 days. So there's the market average. You can then use that to your advantage when you're looking at big picture trends, especially under broad market sentiment. When you see that short volumes, we're down here 47.5%, like, oh, that was a pretty good short covering rally that really triggered, a lot of the gains that we saw in the market. And as you unpack those short volume trends over time, you can see what happens here. They come and go. You'll have periods where short volumes move lower for a period of time, then they move higher, then they move lower. It's just the way that the market operates. What you want to do from a broad market perspective is to be aware of the outliers. You can see that coming into expirations, we were at a little bit of an outlier in terms of how low short volumes were. It's more than likely that short volumes were then going to rise again, which is exactly what's happening right now. But just wanted to speak into those overall short volume trends for a moment. And Henry briefly mentioned this. Obviously, if you're an IBKR user, this is what you would see on IBKR. You would see the daily trading ideas. Many of you are trialing right now for the next month. Glad you're here. Welcome. Henry and I are available. Tim, we're all available for any questions that you might have. I'm bw@marketstructureedge.com. Happy to address any questions via email. Happy to get together with you in person. We want you to succeed, so please help us. Let us know how we can help you. But what I wanted to share with you briefly is you will have custom-made portfolios. You're given the momentum portfolio. You're given the low volatility portfolio. You're given big tech, and then you're given the different sectors, communication services, consumer discretionary, etc. And what you can do is you can create your own custom portfolios. You saw some of Henry's that he's created. I don't even know how many I have. I have probably 40 or 50. But here's an example of what an all equity portfolio would look like. And this is what's called a dynamic portfolio. And it's just quite simply capturing everything. It's capturing small cap, it's capturing mid cap, large cap, mega cap, and I even have SPY down there. But that's just an example of how you can create individual portfolios, and you can customize those however you want to. You can see I have large cap, mega cap, etc. And then I go into sometimes individual companies as well. These are clients that I have on the other side, but you can see I'm tracking AI, and there's just a lot of different ways that you can slice and dice the data. If you really like Bitcoin as an example, you can have a Bitcoin portfolio. So just depends how you want to use the data and what's important to you. I want to make sure that I'm cognizant of our time and some of the most important ways that we can look at the data today. Henry, I think I'll switch over for 1 second. This is a kind of an ongoing document right now. What we're trying to unpack, so I'm not able to share it right now, but I wanted to give you some ideas of how you can use the data. So in other words, you have your daily trading ideas. What else can you do with the data? Does it have to be just 1 to 5 days for trading? Or is there anything that's more longer term in nature? So here's a few thoughts. I'm not going to read all of this, but I'll just give you some of the highlights. If you like to be aware of long-term positioning, here's an example of how you could do this. And it would be a way that you could rebalance portfolios over time. And Henry showed you this look earlier. So you can look at the broad market, and let's say you have a simple portfolio and you just have SPY and you have a few other things, and you want to know when to add exposure to the market and when to maybe take some chips off the table. This would be a very simple long-term positioning tool. When it gets below the green line, you buy. Look what happens over time when it gets below the green line. When it gets above the red line, you sell. It's not like you're selling your whole portfolio, but it would be a way to trim back, some of your winners when you're at these levels. So that's what we refer to as long-term positioning. You can do value investing. We have sentiment, of course, that stretches from 1 to 10. Maybe you have a list of companies, and let me give you a real life example. I was looking at this earlier. Let's say that you want to consider Dell as a possible investment. When would you know to buy? Well, here's sentiment for Dell. It's all the way down 1 out of 10. Short volumes are high right now relative to trend. That would not be a good time to buy. But maybe you set up a dynamic portfolio where you start to catch the companies moving off of 1. And maybe you set it at 3, something like that. It rises above 3. I want to start to catch some of those value companies, but I want to make sure that the short volumes are moving lower at the same time. That would be a good example of value investing and kind of knowing a potential good time to move into those companies. You can short individual equities. We have a lot of clients that will use the data looking at sentiment that is slipping from certain levels and short volumes that are moving higher. That's what we call convergence. So that's just the opposite, obviously, of divergence, where you're looking for greater sentiment and lower short volumes. This is the opposite trade. And when the market does fall apart, like it has during the last week or so, you can really profit on that trade. You can short the broad market. You can do it for a longer period of time. You can do it in brief spurts. I've shorted the broad market a couple of times during the last week. One, when the market just gets out too far in front of itself. We saw the returns on Monday. The whole broad market, I forget the percentage that it was up. I believe it was up over 1% that day. I thought it would slip a little bit the next day. I bought a levered instrument thinking the market would slip. Then I sold it the next morning. So if you don't know what the trends are over a longer period of time, sometimes you can short or go long for a brief period of time. And this last one, this is not a good name for it. I need to come up with a different name. But just big tech awareness. And Henry already mentioned that. If you look at big tech itself, so much of the time as big tech moves, so moves the market. If you look at big tech itself during the last week, look at sentiment slipping and look at the broad market slipping. Now, it's not always, in exact correlation, but why does this play out this way over time? There's a simple answer to that, and I'll share with you. This is a holdings list from SPY. This is as of yesterday. And if you look at the weightings for the large companies, let's just take, I believe it was 9 companies. 9 companies, 1.5% or greater. My percentage is not showing. Oh, I know why, sorry. That makes right now 33% of the SPY. So 9 companies, 33%. If you take it down to the companies that are 1% or greater, that's 14 companies, 40%. So there's 490 other companies that make up 60% of the index. The top 14 right now make up 40%. So very heavily weighted towards the large players. And if the large players are having a poor period, that's going to affect the whole S&P 500. And we've seen exactly that here during the last week and a half or so. We saw small caps move forward by 12% in the course of a week. The mega caps really weren't participating at that time. And the whole average, or the whole S&P 500, just kind of languished there for a little while. So the point is to pay attention to big tech because it does matter. You can go grab this from just the SPY holdings. It's very easily available, and you can do this, run your own exercise to this, whenever you want to. I'll stop there for a second, Henry. Do we have any questions right now?
We do. I wanted to, well, I had two things on that last. For weightings, Brian, do you know the percentage of trading volume that's, they're 33% of the weight, but of the actual trading volume, do you know how that differs?
That's a great question, but that would be, to me, that would be even, even
that would
more
be a Tim
slanted.
question. That would be a Tim question.
That would be
I'd be
even
interested.
more slanted.
I would have to bet that even though they're 33% of the index, I'll bet they make up even a greater portion of trading volume every day. I'd be willing to bet on it.
I would just guessing. I would guess that would be 50 to 60%. And
right.
Part of the reason for that is you have to recognize that ETF plan managers, when they're doing creation baskets, they want liquid stocks. What are they going to take? They're going to take the big guys. So over time, the big guys continue to flourish, the little guys suffer, and it's just been an ongoing trend here for years at a time.
Right. So getting back to the questions, Ernest asked, how can one interpret both demand and supply trending up with a high percentage in supply? And so I pulled up, we have a couple great names. I love when people pull up great tickers.
Mm-hmm.
They're like both, we have Netflix, and then we're also going to look at CrowdStrike, which obviously has been in the news lately. I know I can share my screen, or once you pull, I think we're both, Brian and I think very similarly, and we both just understand the data the way it's intended. And so I look at something like, early on in trading and early on in using Edge, I would look at something. If you want to share Netflix, or I can, Brian.
Yeah, I'll share Netflix. Yep.
I would look at something like Netflix as Brian pulls this up, and I'd be like, oh, I'm gonna buy a one, and I'm gonna be that value investor. And then I just get roasted on a trade, being like, oh, I thought it was at its bottom. But I don't touch things, personally. Like, there on occasion, if there's a shift in the broad market that I can see and catching like a double bottom sort of thing, I might. But Brian, tell me what you read into this Netflix.
Yeah, so we see sentiment starting to rise, which is a good thing. We were mentioning that as a possible, value investment when sentiment does rise off of one. Ideally, you want to see short volumes moving down though, and not higher. So you can almost think of this as investors shorting into this recent weakness. Here's the price. So short volumes are increasing as price decreases. That's not really a great signal. Sometimes what I'll do with these stocks, this is, a little bit over 1 month. I'll sometimes bring this back a little bit, maybe 3 months. You don't want to bring it too far back. The reason for that is trading dynamics will just shift over time. But look at a 3-month look. And take a peek at what Netflix has done in the past at different levels. Here's ideally when you want to hold it, right? This is a momentum environment. This is when it has all its strength. Can you catch it in a value environment? Sure. Look back here when it went down to a 1, and then it started rising. But note the difference. Look at short volumes. They were low. Short volumes are now high. Can you make money in Netflix right now? Sure you can. Is it a great setup to me? No, I probably would not touch Netflix.
Right. And to add on to what you're saying, Brian, is uh, we're like, market structure edge is algorithmic. And so what we know is like, yeah, on occasion, these sort of trades can work, but not consistently enough that you can build a trading career or a portfolio, a steady portfolio off of these. So what Edge does is it says, actually, what we figured out is these things that are hitting the roof at 10 that have falling supply, they're going to keep like looking at Netflix back on, 5/1, 5/16 is we could tell because sentiment is through the roof. It's over 5. Net 5 is our nexus. We want to see stuff moving over 5. Until something starts reaching over 5, I'm not very interested, because a lot of the time these things will just cycle up to 5 and then just keep falling back down to 0 until that short volume, until Netflix short volume is closer to 40% and the broad market is back down to 4. I'm not interested in these sorts of things just because I've been beat up too many times on them. I'd rather find something that's a 10 with falling supply, make my 2% and be confident and sleep well at night.
Yeah. And Henry, if I can interrupt for one moment, here's another way that you can use it. So we're talking about 10s, and that's going to, catch names in our momentum portfolio. Let's say that you want to hold names for a little bit longer time frame. Well, you could set a stop loss on the way up. And if you're making money, and let's say that you bought it at 597 and it's up to 615, maybe you set that stop loss at 605 or something. I don't know. But if you want to hold it for a longer time frame and you're in the money, well, you could continue to hold that as long as market structure supports it. Sometimes what I will do as well, if I've made my 2 or 3% in a name and I do want to hold it longer, I'll sell half the position. And then I'm like, okay, now I'm playing, with with the Vegas money, as it were. Anything else that happens, I'm fine with it. I'm comfortable holding it because I've already made my money, and I can just set my stop loss accordingly. And if I get lucky and I'm able to catch a really big run, so be it. I'm happy to hold that name. So just wanted to share that principle with you.
That's excellent. And then the other, so Ernest asked, will you short Netflix? I don't like Steve's raising his hand because he probably saw the question and he had a great trade on Tesla, which we were going to go into. Steve, can we unmute you? Do you have something that speaks to the shorting environment and why you might avoid something like Netflix that's already, like the move in Netflix to me kind of has already happened. I doubt it's done, but I feel like you missed the boat a little bit. But go ahead, Steve. And for those of you guys who don't know Steve, he's a longtime user, and we lean on him for a lot of just great ideas and perspective.
I was just going to comment. You're looking at Netflix, and you've got kind of the same move with NVIDIA. And I like to look at charts when they're going down and they hit one, to go back and look at their history to see how long they stay at one. And I would venture to say, looking at the NVIDIA chart right now, it's and it's also dropped, when that hits down below 100, assuming it does, since we still have short volume, it looks like something that the eyes should be kept on. If you bring up NVIDIA, you'll see.
I'm pulling that up right now, Steve.
Right, to clarify, I mean, Steve, look at NVIDIA at 41, 42% is a lot more attractive, right?
Yeah.
Versus Netflix, which is not NVIDIA, at 60%. Those are two wildly different approaches, right?
Right. And
so, Steve, can you walk us through what you're looking at when you look at the NVIDIA chart?
Well, just what you're looking at right there, when you're seeing that in the past, when it goes down and it hits bottom there at 1 on demand, then my eyes are open, because it doesn't stay there, but for a very short period. You can look right there, 1, 2, 3 times that it's done this. It's had a pretty good bounce back up. And there
was only one time where it didn't, but short volumes were higher then as well. So kind of bringing both of those into play. short volumes not quite as bad there. They were certainly much higher through there.
Right.
Steve, let me ask you this. Are you going to wait for, I'm expecting we're going to have a cycle through broad market sentiment to a bottom. Are you going to wait for that bottom, or are you going to look to jump in something like this?
I'll probably jump in when that price goes below 100.
Right. So you have a price target. Yeah.
Yeah.
That's great.
Yeah.
Thanks, Steve. We really appreciate your perspective. It's always, like I said, Steve is, he's an expert user, and we all glean a lot from him. Brian, one more. You're bringing up CrowdStrike. I'll let you run with it there.
Yep. So CrowdStrike, what was the question specifically with this one, Henry?
Yeah, so there's been a lot of news around. I think CrowdStrike had like an outage or something like that. I don't follow close. But lately there's been some negative news, yet the outlook is good. Define outlook. How would you trade that? I would not. I would be aware of the news. I would trade the news relative to sentiment and short volume. And then as far as like outlook reports and those sort of things, I don't really, not to be flippant, but they're very fickle.
Yes.
And so that's why we avoid earnings reports and things like that. And so anyways, I think an earnings report is probably the outlook on earnings. But as I look at the price, I go, yeah, the question is at 280 or, at 260, is CrowdStrike like a pretty good buy relatively. So go ahead.
Yeah, no, it's terrific. I mean, it's two different concepts. It's a concept of fundamentals, versus supply and demand, two very different, concepts. Is it more attractive, right now at 258 versus 377? From a price perspective, yes. Does supply and demand support increases right now or recovery? Not right now. No. And recognize that everything that Edge does, it's going to be in central tendencies, right? You're not going to exactly catch the bottom. If I wait for sentiment to move back up to 4 or whatever before I get back in, recognize you're probably not going to catch the exact bottom, but you're also not going to get burned, right? If you were at 377, sentiment slips below 5, should I buy? No. Sentiment doesn't support it. Should I buy? No. Should I buy? No. And recognize when sentiment is falling, one way to think about it, an analogy that I use, it's like a car going down a steep hill. And obviously you build up a lot of speed going down that hill. And once you hit the bottom, there's still, let's call it inertia built up. And sometimes that will continue to just stay at 1 for a period of time. I think stocks like NVIDIA are the exception, where you'll hit 1 and then you'll just, rapidly bounce. A lot of times you'll see something hit 1 and it might languish for a period of time until you can get enough demand to pick it back up again. So right now, I would stay away from CrowdStrike from a supply and demand perspective.
Okay. Are there any other specific names? Otherwise, I think we're about wrapped up for the day, unless you have anything else. Excellent.
Yeah, I do want to share
those names. Yeah, go ahead, Brian.
Yeah, I do want to share one thing just in terms of the path ahead, right? We've obviously seen a lot of volatility, and then it's and thank you for sharing the email addresses. We're happy to address anything you might have, or as I mentioned earlier, happy to get together with you guys. But if we look at the path ahead, couple different ways to think about this, and we'll start with broad market sentiment, and then we'll move over to big tech for a moment. So right now we can see that short volume is moving higher. We'll move this back just a little bit to get a little bit of a longer term view. Recognize 3 things in the market: broad market sentiment, context, divergence. To go long in the market, you're wanting ideally to not be in the middle of these events. This was expirations, this is month end activity. you're trying to stay away from big things that can kind of skew the market. We saw what happened with expirations. So as we look ahead, the next big events will be month-end activity coming up here in a few days. What will market participants need to do at month end? Not only from an active investor perspective, you can think about what we call window dressing, where everyone's trying to tidy up their portfolios and present the best look to their clients. You have that going on, but what's happening from a passive investment perspective? After the losses here during the last week and a half or so, what do passive investors need to do at month end to true up their but true up their weightings relative to their models? So that's one thing going on. Once again, look at the short volume trend. If we see it from a historical standpoint, usually these short volumes will run 5-6 days at a time, one direction, and usually they shift back the other direction. So that's one thing I'm watching. Will short volumes continue to increase? I would expect that broad market sentiment will really start to slip from these levels. That's just my expectation. I could be wrong about that. It's why we look at the data every day. One other item to talk about, and it's an important one. We talked earlier about the weighting in big tech in the broad market. Well, look at where big tech is right now. Sentiment has slipped all the way down to 1.9. So essentially, all of those players are almost completely oversold. You don't get that very often. What happens eventually when everything is severely oversold? Well, they'll catch a bid. And, recognize as well that since big tech is, approximately 35-40% of the market itself, if big tech does catch a bid, then the whole market's going to catch a bid with it. So just recognize that fact. Pull up big tech, watch this closely. We'll try to keep you in tune with that on the daily notes as well. But just watch for big tech to potentially catch a bid. A couple of different ways that you could play that. If you like leveraged instruments, here's one for you that's an S&P 500. It's SPXL, Sam Peter X-Ray Larry. If you like the FANG stocks, it's FNGU, Frank, Nancy, George, Uncle. Recognize that both of those are leveraged instruments, and they do carry a lot of risk. There's a lot of potential upside with them, but there's also a lot of potential downside. And you do want to have your risk parameters set up with those trades.